Woolworths, food and clothing retailer, this we know, headquartered in Cape Town. What a city. Founded in the 1930s by a guy called Max Sonnenberg, but it's of course evolved significantly since then. Significant clothing retail assets also in Australia, not to be forgotten, but certainly a premier food supplier here in this country. Market cap has done very well in recent months. 57.8 billion, call it 60, rounded up. Price to earnings ratio of only 23, dividend yield of 2.6. Daniel, this one's actually done better in recent months because quite a few of the others fell and it has kind of held its level.
Yes.
Again, what's your current view of the package offered by Ian Moyer and his team over there from Woolworths with regard to share price?
Okay, so just commenting first on where we are currently with the share price versus the other guys coming off. Where Woolworths is very distinct in the space is they are specifically targeting the higher LSM customer, the more wealthy customer. So all these headwinds that you have coming against consumer purchasing power are focused more on the lower end. And that's why guys have gravitated more towards Woolies, because they are ironically now seen as more defensive in a way.
Yes, so they're the sort of luxury provider where people that are that little bit richer are less affected by credit demand or credit accessibility issues.
Exactly, they're less affected by fuel costs, electricity. It's a smaller percent of their monthly bills, and they've become accustomed to the quality of Woolies food, and also the Woolworths food premium is not that significant to the rest of the guys. It's
what
not
do you mean
like
in terms of price? What they sell?
In terms of pricing premium. You know, it's not like previously where maybe perhaps in 2008 you can say that the pricing was at quite a significant premium, so that when things fell off there was a huge drop down in demand. And I don't think you have that same risk now. I think the guys have got the pricing right. They know their customers well, and they are in a sense more defensive in this market now than the lower LSM guys.
And what about the clothing and the homewares? Because that used to be a bit of a handbrake, it felt to me. Do you feel that they're getting that mix better now?
Yes, that's
Product
a
ranges
real,
are better.
That's a continuing engine for growth and improvement in that business. Their sourcing is better, their styling is better, their systems are better, and you can see it in the performance of that business and in their operating margins, which I still think have some way to go.
And what about Australia? Not doing very well at the cricket at the moment, but you know, on the retail front, you're prepared to be a bit more optimistic?
I am prepared to be so. Australia has been difficult for the last couple of years, but in the most recent results, they showed a very encouraging turnaround there. They've implemented some new strategies, new pricing points, moving merchandise around at different prices, and judging from the latest numbers, it's proving successful.
As far as Ian Moyer, when he came in, he did a couple of key things. You've mentioned them already, but one extra is that they brought in all those smaller franchise holders, you know, the sort of in-store mom and pop type arrangements with the petrol stations and so on. So that's given them a bigger footprint. Moyer reckons they can actually significantly grow their market share here. So he's not just talking about a, you know, kind of trend-based recovery. He actually reckons this could be a group that adds serious scale in terms of their top line and then, you know, hold the margins.
Yes.
So I heard this is one that global investors were really keen on at recent conference up at Sun City. You prepared to go hot on this one? You liking it?
For me personally, this is best in space at the moment, and I'd go hot on it.
Excellent. Me too.